Hello, guys, and welcome to actually, this is going to be something slightly different. It's not going to be a live stream. We're trying out a different format, and I know some of you guys have requested it. So we're going to be going through everything to do with Ethereum 2.0 and how can you use this in order to make yourself rich, whether it's through staking or capital appreciation of Ethereum itself. Firstly, AJ, how are you?
Yeah, I'm good, thanks. Yeah, we've got a lot of exciting stuff to talk about today, so I'm excited to get on with that.
Fantastic. So without further ado, I'm just going to jump straight into it. So look, guys, as you can see, everyone is talking about Ethereum. Everyone's talking about it, so Motley, Fool, Ascent, I'm not going to go through it all, but you can see everyone's talking about the Ethereum Merger. What is it? So the merge, this is eventually the current Ethereum mainnet will merge with the Beacon chain, which is a proof of stake system. So we are moving from a proof of work system on Ethereum to a proof of stake system. So this will mark the end of the proof of work for Ethereum, like I said, and the full transition to proof of stake. Now, let's talk a little bit about just firstly the naming. AJ, bring us through some of the naming here.
Yeah, so if I could just add to my screen quick, there we go. So firstly, the name Ethereum 2.0 has been retired. The foundation thought that the term 2.0 was confusing, as it implied that there would perhaps be two different Ethereums. According to this post on the Ethereum blog, they stated that one major problem with the ETH2 branding is that creating a broken metal model for the new users for Ethereum, they intuitively think that ETH1 comes first and then ETH2 comes after, or that ETH1 ceases to exist once ETH2 exists. So neither of those are true, and they believe it's going to be much clearer to refer ETH1 as an execution layer and ETH2 as a consensus layer. And if I can show you this here, they want to they want to combine. Both of these combined being Ethereum, the execution layer and the consensus layer. And this is a move by the foundation. This move by the foundation has split the Ethereum community slightly in half, with some for and others against. But it is true that most people have associated the merge with the name ETH 2.0. The foundation does have a point, though. There has been a lot of scamming going on. So if I could just hear scam prevention, there's already been many stories about scammers that have attempted to use ETH 2.0 merge as a way of scamming new people by telling them to swap their ETH1 for ETH2, for example. The name ETH 2.0 also creates this perception that with this upgrade we would see ETH 2.0, when realistically when the reality of it is that the Ethereum upgrade was a multi-stage process with a number of different steps.
Yeah. And also, I think there's that. Obviously, for beginners, it's going to confuse you. But we're used to having. I mean, we've got Luna Classic. You got Bitcoin, you got Bitcoin Classic. I think you got Ethereum and Ethereum Classic. Maybe not. Yeah. I don't think you have Bitcoin Classic, but Wrapped, for example.
Wrapped, yeah.
Yeah. So you have the Ethereum Classic. So there is that element of confusion there.
Yeah.
And so what I want to jump into now is just a little bit about the first step. We've said we're changing from proof of work to proof of stake. What is proof of stake? So we'll firstly go through proof of work. Some of you will, I guess a lot of you will be very familiar. But basically, actually what I will do is just quickly show this. So within Ethereum, there are 3 layers. This only has 2, but there are 3. And this is exactly what you just said here, AJ. You've got the execution layer. That's kind of the things, where things are done, transactions are done. And it's worth noting the gas fees probably won't drop significantly because
Yeah.
the update is only on the consensus layer. It's not on the execution layer. So we're not going to see a dramatic decrease in fees, but we might be able to see some of these scaling solutions help with that problem. But right now we're only looking at a consensus layer. So you have execution, which is kind of like the transactions. The consensus is kind of the proof of work. It's the actual blockchain. And then the third layer is accessing data. But back to, you know, the consensus mechanism, proof of work, what you need to do is you have loads of computers solving an algorithm. Whichever one is first, then they are awarded a block. And it takes an awful lot of energy, you know. And obviously, you know, we've said before about how the European Union almost blocked proof of work as a whole, which would essentially ban anybody from mining Bitcoin. But it does have its benefits in that proof of work deters frivolous. I don't know why that didn't come in. Frivolous use of computing power for purposes such as sending spam emails, because you're not going to try, if you're working on a proof of work system, you know, yes, you can spam a lot of people, but it's very expensive to create those blocks. And so that's the issue. Now, this is due to, so Ethereum is currently on the list, as you see here, in terms of proof of work coins, but this is obviously going to change, and that is due to the increased safety associated with proof of stake over proof of work. So that's just quickly what proof of work is. You know, we're all very familiar. Bitcoin works on a proof of work, so does Litecoin. Proof of stake is more Cardano, for example. So proof of stake is another mechanism, extremely popular. It's developed as a low-cost alternative, consumes less energy, so that's very good for institutional investors. Doesn't say it on here, but it's just a little side note. And this is very good when institutional investors are looking to invest in certain asset classes or into certain companies. They have to keep in mind something called ESG, environmental social governance. And so when you're good to the environment, i.e. using POS instead of POW, then that is a very good thing.
Yeah, that's one big, you know, one big thing that institutional investors are taking into consideration is the ESG, or you know, the environmental social governance, and it, you know, it's a big decider in their investment strategies, because a lot of big institutions are trying to go greener and reduce their carbon footprint. You know, and you know, investing in something that you know is sort of thinking about the ESG, then you know that's more appealing to institutions like that.
Oh, 100%. I mean, we saw a couple of weeks ago, Tesla dropped by around about, I want to say 7 to around 10%, just because they were dropped out or kicked out of the S&P 500 ESG category. And so that's just, you know, a ton of people obviously disinvesting into Tesla. That's how important it is. And also Tesla's massive. So just to kind of carry on with the POS, because, you know, obviously ESG is super important. The way in which the POS works allocates responsibility to maintaining the public ledger to different nodes based on their stake or the number of virtual cryptocurrencies held by them, essentially. So what they're doing is they are rewarding people based upon how many coins they actually hold and they have staked, or essentially, you know, put onto the network. So very similar to if you put more money into a bank, typically they'll give you a higher rate of return. And if you put a smaller amount, they give you a lesser rate of return. So one other way to kind of look at this is that there are some problems with proof of stake. You know, we have to go through all of the scenarios. The problem this leads to is, for example, if a bank wants to have more power within the system, all they need to do is to hold on to more cryptocurrencies than individuals or groups at other nodes. And that means that they will receive more of the rewards. But it's not all bad news. So with proof of stake, the network actually gives mining power to you based on your percentage of coins that you hold. If another miner holds a higher percentage of coins than you do in a POS system, they will have more mining power than you do. And that's exactly how this example up here works. So I just want to make sure that everybody's, very well aware. So typically what you do is you have pools, be like a mining pool, and you will join. So instead of being just like, in that you have the same in proof of work, for example, people club together to make sure that they are bigger as one unit. And then once that unit is given a particular award for either mining, or let's say a Bitcoin, or confirming a block, you get a small portion of that. And the same is true when we come into proof of stake. And this is what we see from the Ethereum Foundation blog, is that Ethereum's energy usage will soon decrease by 99.95. And this is why I'm so glad, AJ, that you mentioned about ESG.
Yeah.
Having this, it's going to be absolutely unbelievable. And so we want to then begin to think, well, where are we going with this? And I want to use an example of Cardano. So this is CoinMarketCap. It's just a calendar, roughly when we're going to see the Vasil hard fork for our friend Cardano, which we know has pumped crazy in the past few days. So this is what AJ was saying about this in one of our previous streams. And I'm going to let him kind of just, go over this again and kind of explain why we're seeing pumps and what's going on.
Yeah, so like I explained in the previous live stream, when we are coming up to these upgrades, we do see a pretty significant pump in the price of Cardano. And after the event happens, after the upgrade happens, we do then most of the time continue to see more price action towards the upside. Obviously, the most recent one, we did have price action coming to the upside, when we were coming towards that upgrade, but unfortunately we, had a pretty major pullback after that upgrade, went live. And that was, mainly because the whole market was, the whole market topped out and the whole market was just, dumping. So, as of right now, the market is still dumping. So that is why we're not seeing really, much price action to the upside like we have previously. But, if the market starts to, show some more bullish signs, then without a doubt, I do expect to see the price pump like it has in the past.
Yeah, exactly. And people love these, investors love these bits of news where, it's the anticipation of a potential movement in price or increase in fundamentals around a general product. And that's why, it's so clear to see on this chart. So what we're moving into right now and what Ethereum has launched is called the Ropson Merger. The Ropson Merge. So it's the first long-standing testnet to run throughout the merge. There's a lot to go into, and I'm not going to go into all of the details about this particular part of the merge, but it's worth knowing that there were two previously. The initial one was Kintsugi. This went live in preparation for the merge, as you see back at the beginning of this year, or late last year. And then we also see the Kiln testnet, and this went live around March. So now, obviously, we're on Ropson, and this is where we're going to begin to see a little bit of movement. I have just mentioned it's a consensus layer, and so the overall issues that we're kind of dealing with right now is, and this is partly why I think Ethereum lost around $11 million last year in asset outflow from institutions, is that, like I said earlier, back here, where eventually the current Ethereum mainnet will merge with the Beacon chain proof of stake system. So Ethereum will be working on the Beacon chain. Keep that in mind, because what we saw last week was actually Ethereum's Beacon network deals with a 7-block chain reorganization. Now, essentially what this is, I haven't gone through and highlighted any particular bits, but we see that on May 25th, 7 blocks were reorganized on Ethereum's Beacon chain at this time. Between these blocks here, the reorganization was discovered, who noted the current attestation strategy of nodes should be reconsidered to hopefully result in a more stable chain. This is essentially saying that they're supposed to be working on proof of stake, but there was an issue with the organization of these blocks. So that's a very bad sign for the merge, because obviously we're going to be using Beacon Network, and if it currently is reorganizing then that's not going to be good. Obviously, this is what a testnet is for, and that's the whole reason why Ethereum is going through this process. But I want to get onto staking now, guys. This is kind of one of the very exciting parts of the video. AJ, do you want to touch on a couple bits of staking?
I can do, yeah. So just trying to see. It might be better if you talk about the staking part. Yeah,
I'll start on.
Yeah, and then I'll go on to the. I think I'll go on to the Ethereum on exchanges after that.
Very good. Okay, yeah, that's a very nice flow. Like that. So guys, staking. So you can stake your Ethereum on to, well, essentially stake your Ethereum on the network. We can see a very strong trend moving pretty much continuously up in a fairly linear fashion. As the day goes by, each day is more ETH. That's been quite a fairly steady trend, to be honest, as far back as this data goes. And then the number of depositors, so that kind of exploded around about here, where we had I want to say, I'm going to quote it, EIP, here we go, the EIP 1559. Now, the EIP 1559, that what was introduced there was essentially a burning of some of the tokens when there is a gas fee paid. So we're seeing that massive spike up here in the number of people saying, okay, well, actually, it kind of now makes sense for me to, stake more, because we're going to end up at a stage where we're actually using more Ethereum than what's being minted. And this is where it's going to get very interesting. And guys, once we have this merge, I expect this to happen again, just at a later date here. I expect the number of addresses to massively balloon. And I will show you a little bit why. So, firstly,
and at the moment, there is around 12.77 million ETH being staked as of right now. I think that might have even been an all-time high, wasn't it?
Yeah. So where are we now? Yeah, 12.7 million ETH.
Day by day,
that's an all-time high.
Yeah.
Man, no, I can't go any further. Yeah, it's absolutely crazy. That absolutely. How much is that in dollars?
Not
25
too sure.
million.
Wow.
Yeah.
Yeah. So the demand as of right now, it seems to be increasing rapidly ahead of this merge, where we will then see it become, deflationary. But it's, the demands that we're likely to see after the merge, that I'm quite interested in, because currently, if you want to stake your Ethereum in the contract, you can't withdraw. So, there are still many people and institutions who are holding off with staking, as as they would like certainty around, the merge events, such as if the merge is going to be successful, and if there's certainty around when you can, withdraw your Ethereum that you have staked. So there are a lot of people and institutions who would like to stake their Ethereum, but would just like that certainty first. And the staking rewards are most likely to go up after the merge, which will attract, even more people and even more institutions to stake their Ethereum.
Yeah, and absolutely. And that is a major question mark at the moment, is like, if I am locked in, how long am I locked in for? So this is one thing that you have to consider, and especially that is a very, very key. Again, that's fantastic. I'm so glad you brought that up, because if you're managing someone's money, let's say I give someone in the audience, if I give you $1 million to manage, and I say, look, you're qualified, you're managing my money. One, there's a personal expectation, but if there's also two, you have a legal expectation to manage my money in a good way, because you're a qualified financial advisor or fund manager. You legally are required to, carry out the right due diligence and not just throw it all into shitcoins. So if there's that in effect, you have to be sure of what you're investing in. And that's why those kind of question marks are there. But just like you said there, AJ, we're looking to see an increase in the staking yields. So this is from Coinbase. So Coinbase have said the current rewards are sitting around about 4 or 5% for stakers. However, cryptocurrency exchange Coinbase, that is getting a bit freaky. I think it's a fly. It just kept coming at me. Turn around, knock it out. The crypto exchange Coinbase sees this changing for the better. and I'll get into a little bit more detail. The figures provided show that Coinbase is expecting these rewards to double. So then going towards 8 to 10%. So Coinbase has told its clients that it's expecting a yield on staking could go upwards of 9 to 12%. And one of the reasons why this is happening, guys, is they're on a proof of work consensus. So when someone does, or when a rig does the work, they get rewarded. Now, if you take all of that away, you don't have to pay the guys who are doing the proof of work. They essentially, their revenue will go to zero, but what's going to happen to those benefits? That's going to be distributed to the validators of the network itself. Now, this removes the need for miners, here we go, perfect, which requires large energy consumption and rewards validators for bridging the gap and authorizing transactions, which I think is really quite cool. And I just want to give you a visualization of when we have not just more people staking, so therefore less supply, but another key thing is the issuance. So let me show you here. I'll walk you through this. Ethereum 2 phase 0. So the issuance, this is how many coins are being issued every single day. And I have some live data for you here, but I'll just quickly show you this. So phase 2 issuance went up. People were issuing, or Ethereum was issuing more and more Ether per day. Then we have the burning. So that reduces some of that, the burning of some of the gas fees. Then you have the end of the mining. So at the end of mining, issuing of coins is going to go down drastically. And then Ethereum phase 2. But this is going very much in a downward trend. The key thing I want you to take away here is this is going into a downward trend. And this is where we could be in a deflationary environment for Ethereum, i.e. more coins are being burnt than being created.
Yeah, it's estimated to, drop about 90%. So the issuance is expected to drop from 5.4 million ETH a year to 500,000 ETH a year. So, that's a massive drop, dropping the inflation rate from, I think it was 4.3 to 0.43, if I'm correct.
Yeah.
And
so yes,
that's 4 times lower than than that of Bitcoin as of right now.
Yeah. And that is unbelievable. So currently, you can see this is live. Ultrasound.money, recommend you check it out if you're interested in Ethereum. So Ethereum burn per year, that's 2 million. So that's currently set at 2 million burn per year. Plus we have the supply growth per day. Maybe I'll just change that, 7 days. So 30 days, 0.08, and issuance is 0.5 million. So that's 500,000. Now, this, I should say, so my mistake. This is before the merge. So before the merge, we have a supply growth of plus 3.2% per year. And now, obviously, this is where we are currently at here, right about here. So plus 3.2% per year. So there's more being made than what there is being burnt. And obviously, as you guys know, you're issuing this much, and you're only burning this much. It's the same as what we saw with the US dollar during the COVID crash. Then we go into tightening mode and all this. This is where we have the merge, and you're in a deflationary environment where you're burning 1 million ETH per year. Now, you don't need to be a massive economic genius to know that a simple supply and demand will be crazy. And then there's even more of that supply the supply that there is taking off exchanges to either go into cold storage wallets, go into DeFi projects, or be staked on the network, which again has a lock-in period.
And without a doubt that, that is going to, increase the price of Ethereum.
Yeah, and that's one of the reasons why I'm quite bullish, not just on some of the staking rewards, which are going to double to around 10%, but also actually kind of seeing that, we could be having a great deal of appreciation. So some people are calling for a $10,000 Bitcoin. Some people I saw this analyst, he was calling for around 6.6K Bitcoin. Either way, that's kind of, a 3x. But I think that was quite conservative. And especially when we have some news like this. just wrapping it up on some good news. Soros Fund
Yeah.
Management
So
CEO.
should I just talk about quickly the exchanges
Yeah.
before you get
Absolutely.
on to
Let's do
that? Yeah.
that.
So let me just share my screen. So more recently we've seen some of the largest outflows yet from exchanges. For example, according to this data from Into the Block on the 15th of March, over 180,000 ETH was withdrawn from exchanges in a single day. That's a huge amount of Ethereum being withdrawn from exchanges. This can also be confirmed with the data from Glassnode as well. Taking a look at this chart on the screen right now, with their chart that shows the total exchange balance. As you see, the balance on exchanges is at the lowest level it has been since August of 2018, I think. Which is pretty crazy. And what does this mean? Well, it means there's going to be less Ethereum on exchanges, the less Ethereum on the exchange, so that there's less Ethereum that's ready to be sold, and hence the suppress in price. Those people who are moving their Ethereum from exchanges are probably doing one of three things. They're holding it in cold storage, like a ledger, using it for using it in
Like a DeFi project or something.
yeah, DeFi protocols, or they are depositing it into ETH staking contracts and earning staking rewards off of it. So yeah, you can see that Ethereum is continuing to be pulled off exchanges, and as I said, we're seeing the lowest amount of Ethereum on exchanges since August 2018.
Yeah, it's absolutely insane. This I think is really quite good. I think it's a very good thing that we have a large percentage of Ethereum actually being staked, and again, that will increase, especially if the merger goes well. Institutions get involved; they quite like it, and then they are able to get into what they see as, because I'm going to go out on a limb here. I'm going to give you an opinion. Okay. I think that the way institutions view the crypto space, Bitcoin is kind of like gold, but also there's like a crazy, unwarranted, in their mind, an unwarranted love for it by degenerates like you and me who love crypto. And we kind of see this as being the future. There are some really old guys who say, look, it's not backed by anything, doesn't really do anything. It's not the fastest, it's not the cheapest. It's just the first and arguably one of the most stable, exclude the stable coins, obviously. But there is still some upside to it but Ethereum, you're actually doing stuff with it. This could, Ethereum, because of the smart contracts, you could get rid of real estate agents, you could get rid of lawyers, to certain degrees. There's so many different things that you could do on Ethereum. It's really the workhorse, and that I think is what some of these large institutions really like. But as you said earlier, AJ, we're just waiting on, is it good enough? Like, is the merger going to work? Is it going to be ESG friendly? There are those question marks there. But I think, once we do have those answered and we move away from POW to POS, we'll probably look pretty good.
Yeah, and personally, if this merge, is successful, then I think this just confirms that Ethereum. Personally, for me, Ethereum, is one of the most revolutionary technologies, of our time.
Yeah, absolutely. I just, and this is why I love the smart contract coins. I just think they have a great use, and it's really hard to try and sell old school investors on something that's like a new funny money that they just don't like. And there's no way getting around. Not everyone's like that, obviously. But I'm saying that there are some people who are extremely affluent and just don't understand crypto. And that's fair enough. They've made their money in traditional markets, in traditional ways. They don't need to think about crypto. They don't need 100x coin. But I think, you know, we will see a change away from that. And then those coins with real utility are going to be the ones that we get excited about.
Definitely, yeah. Yeah, someone just said the gas fees are ridiculous. Yes, they are.
Right, exactly, yeah, I know. But, and that's the thing, that's where we're going to have a whole load of layer 2 scaling solutions, because like I said earlier, you know, you've got the execution layer, that's where the gas fees are. You've got the consensus layer, that's where the energy use is. And then you've got like the data and stuff. So, but yeah, the gas fees right now are unbelievable, you know. But there are coins like Loopring, for example. You know, I quite like that. They take a whole load of transactions and they just squash them down into one, and then that one goes onto the Ethereum blockchain, so you don't have to make as many blocks, so the fees are lower. But yeah, there are a lot of, you know, solutions. I just think currently there needs to be a big change.
Proof of stake won't have much. Sorry. I was just going to say, proof of stake, I don't think, you know, will have much of an effect, you know, on the fees. And, you know, same with the sharding. I don't think that will have much effect on the fees either.
Yeah, no, not yet.
Yeah.
But anyway, guys, do you want to leave them with anything?
I think I've said everything I wanted to say.
Yeah, fantastic.
Well, we can have a quick look at the charts if we wanted to. Yeah,
let's have a quick look at the charts while we wrap up.
Yeah. Just because, you know, I'm going to look at this on a weekly chart, just because you know, we are still a way away from that merger. But briefly, I just want to mention, you know, Ethereum is currently sat at this major support level. Looking on a weekly, you can see we found so much support previously, so much resistance previously. So this is a massive level that Ethereum needs to hold. I'd quite like to see, you know, Ethereum bounce off this level so we can, you know, continue that price action to the upside, which we are getting slight price action towards the upside. But, you know, as of last night, I think, you know, the price will start to pull back to let the indicators reset on the shorter time frames. But, you know, we've still got 3 days left of this weekly candle. You know, hopefully we can see a bit of a nicer green candle. But, you know, if we were to break this support here, then I reckon the price will come down to approximately $1,400.
Yeah, that's very nice. I mean, it's kind of worrying, $1,400.
Yeah,
you know, but it's a very
hold the support.
Yeah, it's a very solid level of support that. And I think that's going to be kind of the catalyst of this will be the overall Bitcoin market.
Yeah, definitely. Yeah,
100%. And then we will leave you with that, guys.
Yeah.
Thank you very much. We really enjoyed doing the video. Let us know if there are any particular coins you want us to do a big deep dive into. So this, obviously, we're going through everything from, you know, proof of work, proof of stake. You know, what is like the Cardano pumps. Got what happened before, why over 100 million left last month from institutional money. Sorry, 11 million left last month. So we like going through these. Let us know if you have any. So thank you very much, guys. I will see you in the next one.